Monday, everybody. Welcome. Welcome to another session. Increase your cash flow through tax strategy. Let's go. Let's go. Let's go. Hello, everybody. Welcome. Happy Monday to you. Happy President's Day to you as well. Some of you had a day off today. Some of you still had to go into work, like me, still going into work and making sure that I'm being with people today. I have some wins, guys, man. This weekend I got to be with my wife for Thanksgiving. I know this is Thanksgiving weekend for everybody. Hoping that your Thanksgiving, Valentine's Day, Valentine's Day weekend was this weekend. I got to spend Valentine's Day with my wife. I'm present at Thanksgiving because I'm grateful. I think that's why that came out of me. It's because I'm grateful. I'm grateful for the life that I get to live, the woman that I have in my life. And I hope that you're grateful for your partner in life, if that's you, and you got to celebrate and have that going on. That is a win. Yes, let's go. And for those of you who know me and work with me, and this is what we do. This is what we do. We get to celebrate our victories all the time, and it just creates a velocity. And there is a gratitude for that in life that I have. The gratitude for all the things that show up in my life, all the people, especially my wife, you guys that are on this call today, that have been consistent in showing up for yourselves and making sure that when I come on a Monday night, I'm delivering inside of the purpose that I have for us in this call. So welcome again. And I'm grateful for you. So let's get started, guys. I want to start talking about some things. And hopefully that resonated with you guys. If you're on the call, if that resonated with you, go ahead and put a 1 in the chat. That resonated with you if you had a really great Valentine's Day weekend and you got to celebrate that very well with your significant other. That's me. And we're going to continue our conversation tonight about, there we go. I see you. You got that 1 in the chat. Yeah, we're going to continue this conversation that we started last week about increasing your cash flow with effective tax strategy. I want to preface this call with, see you two there, Baxter, with your 1 in the chat. And I want to preface this call with a disclaimer here is I want to share that there are so many strategies, like tax-wise, that we can put together for any specific person, any specific business. Okay, now I'm going to share some things with you today, just a briefly overview. And again, I want you to make sure, and we say this every week, I want to make sure that you go to your professional, seek guidance for specific tax strategies that you can implement in your life, be it in your business, which is why you're here, or be it in your personal life as well. This is where it's really going to count for most of you, because most of you are using what we call pass-through entities. And just to be clear, pass-through entities are those in which the income of that business doesn't get taxed at the business level. The income of that business gets taxed at the individual level. So all that income from the business passes through to the owners, be it the shareholders or the members of a partnership, or even if we look at it real technical, a sole proprietor is pretty much that in and of itself. All the business income of a sole proprietor is the income of that sole proprietor, the owner of that business. So this does apply a lot to you guys to have that in place, to be here and have those specific strategies in place. But more so than that, you want to get with your professional and get specific advice on that. I'll say what I say every call with our disclaimer, in a little bit. But I want you to get that, right? This is so important, guys. This conversation that we've been in for the last 2 weeks now, last week and this week, is so important because you will lose a lot of money if you don't have a plan in place. And if you don't execute on that plan, you will lose a lot of cash in your business. Some of you are already feeling the impact. It's like, man, why am I having to pay so much in taxes? Those of you who have already filed up until now, some of you have been pretty quick with the filings and have filed up until now. And you're like, man, why did I have to pay so much in taxes? Well, mainly because you didn't have a plan and you didn't execute on that plan. Okay, and that's really the only reason you didn't really set yourself up to win in that way. And this conversation serves to make sure that you're setting yourself up to win in that way. So let's go. Let's get started. Of course, this is me, Cheston Bulgin, CFO tax strategist here at By the Books Consulting, founder of the company. You can reach us at 888-4BTB now. That's 888-428-2669. You can also reach us at youraccountingsuperhero.com. You can email me directly at cbulgin@youraccountingsuperhero.com. Follow me on Instagram for really great insight in this area at Your Accounting Superhero. And of course, we focus on, man, and really it's the realm of peace, ease, and clarity when it comes to compliance, taxes, your bookkeeping, all the organization that you would need to go through inside of your business, some of the things that you would feel as though you're overwhelmed and stressed by. We make it easy. That's what we do. We give you really good insight and feedback into what plan of action you can take in your business as well. But that's us in a nutshell. And again, here it is, the disclaimer: the following is for educational purposes only and is not to be considered financial, accounting, or legal advice. Please consult your tax, accounting, and or legal professional for specific advice. We started this conversation last week in terms of increase your cash flow through tax strategy. This is an ever-evolving practice for yourself and your business, and whoever you've partnered with in terms of your CPA, your accounting professional, your tax strategist, whoever you're working with. This is an ever-evolving practice. And you want to be in the know about the upcoming changes that could impact you, that could affect you, to make sure you are ahead of the game, you are ahead of the curve, and you keep your hard-earned money in your pocket. And more so than that, you can see a way we can create wealth out of this too. There's some pretty cool strategies you can get into with creating wealth through understanding how to leverage tax strategy. And there's so many other investments that people take on, and they're not present to the investment in this area, which can potentially give a greater return. And I'm not going to get too much into that in this call tonight in terms of the return on investment, how to invest in taxes to create wealth in this area. And I will have that conversation later on down the line. I want to make sure that that's delivered in a way where it's super simple and it makes sense for you, and you can take action on that wherever you are, if that makes sense. So we got into, last time we talked about tax credit. We talked about tax deductions, and we started beginning with tax credit strategies. Okay. So just really quickly, before we get into the credits, I want to make sure that credits are understood. Taxes can be, for a lot of people, stressful and confusing, and they don't have to be. I was on a call with somebody the other day, and there's so many levels of this that are confusing with people. One is, the actual strategy for bookkeeping, record keeping, and financial tracking, which ties into what we're talking about here when it comes to taking advantage of deductions and credits. Okay. And the confusion comes into, okay, well, how do I classify things? How do I track it to make sure I get the full benefit here? All right. And what we want to do in our time spent here together is to create clarity where there has not yet been clarity, and like out of confusion, like where there has been confusion, we can create clarity for this. So when I speak with people, like I spoke with the person the other day, it really comes down to getting clear on the fundamentals. What are the basics of this that I can always hold on to in the event that I'm really confused or stressed out about things? And I find that approaching anything like that, not just here in this area in taxes, but approaching anything like that, it gives a great access to creating whatever it is that you want to create in your life, just by understanding the basics and the fundamentals. So fundamentally, if we're talking about, credits, we want to understand what they are. We talked about some deductions last week, and the difference is that credits are a dollar for dollar reduction in your tax liability. They're a dollar for dollar reduction rather, in your tax liability. So what does that mean? It means for every dollar that I owe in taxes, if I get a credit, that credit dollar eliminates that dollar that I would owe in taxes. It like takes that away. So if I have $1 in taxes owed, and then I happen to have a credit for taxes of $1, well, then I would have zero taxes. Now, some of these credits are what we call refundable. Pretty cool. Refundable credits are awesome. Why are refundable credits awesome? Because it doesn't just reduce your tax liability to zero. It says since you have all of these credits, we can now give you this as cash money in your pocket beyond the taxes that you owed. An example of that is the earned income tax credit that like a lot of people take advantage of. It is a refundable credit. Um, and what that basically means is that when people owe less taxes and the credit exceeds that tax amount, well, they get the excess as a refund. Like the IRS will send them a check, they'll directly deposit money in the bank because that's an excess. All right. And a lot of you have heard of that. And maybe some of you have seen like the promotions from tax preparers promoting, okay, I get you this amount of refund, for your kid. One kid, $10 million in a refund, right? That's what they'll put these signs up, and watch out for that, guys, because you might have you might be working with somebody who has no scruples, an unscrupulous person, all right, when they're advertising that way. Okay. But what you want to get inside of this conversation is the basics of it is that, credits are a dollar for dollar reduction in your tax liability. And some of them are refundable, which means that the excess, if you have more credit than you have taxes, that'll get refunded to you, cash money in the bank. Okay. Which is pretty awesome, right? The credits are actually more favorable to have than tax deductions. They're both pretty good. They're both good. And if I were to have one preferenced over the other, it would be credits. Because of this reason. Tax deductions, on the other hand, they are an indirect reduction on your taxes. They are an indirect reduction on your taxes. Why? Because deductions reduce your taxable income. And taxable income is just that. It's the income that you are taxed on. So if you're at a 30% tax bracket and your income is $100,000, you'll get taxed $30,000 on that income. But if you found another deduction, an alternative deduction for that, you would have, like for example, instead of having $100,000 net income, you found another deduction to take it down $20,000, right? Which means now your taxable income is $80,000. You would no longer be taxed $30,000. You'd be taxed right around, let me just get the math correct, $24,000, which is a $6,000 reduction on your taxes. Okay, so that's a $6,000 impact just because you took a $20,000 deduction. Okay, so indirectly, it impacts your taxes. Deductions do. Okay, so if you did not understand that before, I'm hoping that you're beginning to understand the difference in the benefits now between the two. So tax deductions indirectly impact your taxes by reducing your taxable income, less money that you're taxed on. And tax credits are a direct dollar for dollar reduction on your taxes. And in some cases, those become refundable, which means that if you have credits in excess of what you owe tax-wise, that can be refunded to you, cash money in the bank. Right? These are the pretty cool things. So we want to have strategies in place to use both. Okay, last week we talked about deductions more so. This week we're going to talk about some specific tax credits that you can use, specifically in the trucking industry, to reap those benefits. Okay. Now I want to talk about a couple. And before we go into that, let's just get another overview of this. Let's break it down. Okay. Federal tax credits for trucking. The trucking business may qualify for various tax credits, such as alternative fuel tax credits. Now, I don't want you to get confused here. There is a fuel tax credit. All right. This is not what that is. Okay. Like alternative fuel tax credits, which means that it incentivizes you to use alternative energy to power your vehicle, to power your units, or to power your trucks. So there are credits available for that specifically. Okay. And to be clear, there is a fuel tax credit, but it's for, non-highway use fuel types. And if you're somebody here who has a landscaping company, then this will benefit you because you're using all types of equipment that use off-road, like off-highway fuel, like lawnmowers, riding lawnmowers, and all those equipment. You have gas-powered, um, what do you call weed whackers and all those things, and blowers and everything else that uses fuel, right? So you can get a fuel tax credit for those items that are off-road. All right. And other businesses, there's similar businesses that have off-roading, like they don't have highway use fuel types, and they can get credits for those types of for the use of those fuels. Okay. So that's not this. All right. We're going to talk about this specifically today in this conversation, what we're talking about in terms of the trucking industry, how you can use this. All right. So um, trucking business may qualify for various federal tax credits, such as alternative fuel tax credits, which incentivizes the use of alternative fuels and can lead to substantial savings. Additionally, credits exist for using advanced technologies, reducing emissions, and investing in energy efficient vehicles. Okay. Now, the next thing is, like, there are some opportunities that you want to look at if you own your own fleet. All right. And these are pretty cool too. Like I want to talk about a few like here with you. Like really, I want to get into three. Just talking about three things that you can do. All right. So many states offer unique tax credit opportunities tailored to trucking companies, including credits for job creation, investment in infrastructure, specific energy initiatives. Researching state codes is crucial to maximizing available benefits, as offerings can vary significantly by location. Okay. Now, it takes something, and what I want you to be left with here is that it takes a little bit of work up front, investment up front, to really have long-term tremendous impact for yourself. Okay. And it's worth it. Always want to say it's worth doing that work. It's worth investing in yourself in this way to understand, how you can make sure you're stacking cash year after year. Other people don't do that, but you get an opportunity to do that where you are. All right. Just because you're hearing this conversation. Now, when I say the investment, we just talked about a couple of things. One is just knowing what credits are available, federal wise and the state wise. We're going to talk about a few federal credits today. We're not going to get into a whole lot of state credits, but you want to understand like what's available in your state. One of the things we're going to talk about today is something that it actually goes with the federal and state, but you want to know, you really do. You want to take the time to understand strategy for yourself in this area because you're talking about over a lifetime, it could be millions of money of dollars that you're like from opportunity costs, from money that you've been throwing out, and it's worth you taking the time to invest is what I want to leave you with. Okay. So what are some strategies that we want to talk about tonight? A couple of things in trucking. All right. Number one is like because technology is advancing and because we did have a transition in administration, but the prior administration created some incentives for investing in alternative energy type vehicles. So that's one of the main things that I want to bring to the surface is that if you are somebody owning a fleet now, and again, you want to get with your professional on this and look at what's happening like economically right now, like globally, like policy wise with this new administration. But the incentives are for clean energy. That's what they've been for. And most likely, it would make sense to continue that route to to have incentives in clean energy because of how things are going with this planet, right? So if I understand that the government has plans to incentivize this, usually the incentives are going to be inside of tax credits. Okay. So what are some tax credits? Let's just take a look real quick. All right. I'm going to go over, this is one, but it's like compounded into a few things. And, by the way, guys, irs.gov is a really great resource for you when it comes to being able to understand your taxes. and planning for your taxes and having tax strategy. It's a really great resource. It's not the end all be all because it's going to take some real unique understanding about certain tax law to implement exactly what you want to implement. But it's a really great place to be because it'll give you great insight on what's available. And now you have some actions that you can direct your attention to. Okay. That's why it's a really great resource. Okay. So I'm going to go ahead and share this with you guys. Let's go. Okay. Pretty cool, man. There's a lot of credits available for for people in this country. One of these credits is clean vehicle tax credits. And what does that really mean for you? You know, what does that mean for you? So when it comes to clean vehicle tax credits, there are incentives to purchase and buy and use for business, commercial use, especially commercial use, clean energy vehicles. So, and vehicles that use electric or some type of hybrid approach or uh, hydrogen fuel cells. Like these are equipment features that are incentivized, especially when it comes to being commercial. Okay. And let me just go back. Yeah, there's something else I wanted you guys to see here. Well, there it is. All right. I wanted to stick to the commercial clean energy vehicle credit because, man, look at this. You can get up to $40,000. $40,000 of a credit. This is you. Now, what if you had an extra $40,000 coming back to you tax-wise? Now, this could be a major impact when you are seeking to be a very profitable company and minimize your tax exposure. Okay. And what I mean is that if you're generating, tens of millions of dollars and you want to make sure you're retaining earnings to reinvest into the company, yet, year over year, you're looking at a bottom line that gives you an excess amount of profits. You're going to be taxed on those profits if you're any one of the pass-through entities, you're going to be taxed on those profits at the individual level. Now, if you have strategized in a way where you're going forward and purchasing equipment that are in line with this tax credit, well, that's $40,000 that you can cut out of your tax bill. And that's a significant deal. Okay. Significant deal. All right. Now, I'm bringing this to your attention really quickly just so that you can go ahead and actually get with your tax professional and go through the research and how this is going to apply. Right. Because there are some nuances to implementing this and understanding like what qualifies and what does not qualify for this and how you need to put this into place, and it's worth it. It's worth it. Some are like, man, that'd be cool to have a $40,000 rebate on taxes. Yeah, 100% it'd be cool. Okay. Now there are other things too, like on the personal level that go inside, like you can kind of work these symbiotically, like integrate to like multiple strategies in one here with energy. Because if you have like, things that you're doing at the home, personally, you can take advantage of those credits too. Like if you're getting solar panels, you're getting like some alternative energy source for your home. And now you're actually compounding tax bucks, like banking tax bucks, right? Money that comes back to you when it comes to taxes, right? And what would it be like to be able to have that resource of stream coming back to you? What would you be able to do with an extra $40,000 of cash inside of your business, inside of your life? What could you really do with that? Right. And when I talked earlier about return on investment, this is what I mean. Okay. Because now you're already going to spend money investing in equipment inside of your business. And then, like, why pay extra in taxes than necessary? You can actually take the savings in taxes, reinvest that into alternative investments or back into your business and get a significant ROI on the money that you're investing, right? On so many different levels, guys. And like I said, man, I want to go over that specifically in some calls. It's going to take, me putting together some things so you can see it visually, all right, and illustrate like the return on investment. And I'm willing to go through that and do that so that you can really understand the impact, to see how much you can spend here, like in terms of your attention here, and not really seek to do anything else, but you really look into your business to invest in that instead when it comes to these particular aspects of it, when it like taxes and how you can reinvest in your business and how you can create different streams inside of your business and have that return on investment really, really be high, based on this, right? So just be clear that, this opportunity is here. This is one of those. This is a commercial clean vehicle credit that's available. Okay. Now, what else is available? All right. The one thing I wanted to talk about too, I'm not going to share it on the screen, but I want to come back to you, and be with you on that. I mean, and if you're in here with me, with me on this call, wherever you are, if that is something that piques your interest, put a two in the chat. That piques your interest, put a two in the chat. If that just even to ask what I said about, the commercial clean energy credit, the commercial vehicle credit, clean vehicle credit rather. That like that $40,000, if that's something that, man, it's like you didn't know about that, that piques your interest, put a two in the chat. And even if I said what I said about a return on investment, if that piques your interest, also put a two in the chat, because that gives me an understanding of what you're here for inside of our conversation and what we can deliver even more, like with a higher degree of focus. Okay. Now, the other thing, thanks guys. I see that. I see you coming through with those twos in the chat. All right. So that makes sense. It does make sense to go that route, right? To give you access to that. So the other thing is that I wanted to share with you is retirement, man. Like just having retirement available for your employees, creating a retirement for your employees, you get a credit for that, right? You get credits for just doing those things. Some of you are already doing it, but not taking advantage of the credits by setting up retirement accounts. And why not do it in a way where you're getting, the premiums and everything credited for taxes? You can shift it so that you take advantage of it, and that's a big deal. Some of you are dealing with paying 1099 people a lot, and that's one thing is that that's a compliance issue if they're really not classified that way and you're choosing to pay them that way. What I mean is that if they're technically classified as an employee, which means that, they work for you, they have their own hours, they don't provide their own equipment, they don't they they don't have really control over the contract and how that goes with you and the company, and you have more control over the contracts and everything with how they work with you. Well, technically, they're not really classified as contractors, they're employees if you have most of the control. Okay. And now, if you were to shift that to make sure that they're shifted over to W-2 status, well, it opens up a window for you to receive credits for these types of things. All right. Like creating like benefits by way of, health insurance. Okay. Health insurance and everything else. All right. So there are credits available for that as well. The and I will like these credits, there are so many guys. Let me just show you this to give you an idea. There are so many different credits available. Okay. And again, I'm going to say that a resource that you can go to is irs.gov, just to even get your eyes opened up to this. But some of you guys, you wouldn't know what to search for in this vast resource of the irs.gov site, which is why we have these calls, so we give you an idea of what to look for if you're going to search for these things. And if you even go to the irs.gov site, you put in business tax credits, you look at all these. All right, look at all these business tax credits available. All right. There's so many. Okay. There's so many of them. You wouldn't even know what to do with these. Okay. And here in this conversation that we have together, we get to be directed in terms of how you're going to benefit from these credits. Okay. And, like I said, opening up a health insurance benefit program for your employees gives you an access to credits. Okay. And like I said, you may be even doing this anyway. The other thing that I want to bring to your attention is the worker opportunity tax credit. Some people, man, you guys are not taking advantage of that. All right. That's up to $9,000, man, depending on where you are in the country. Okay. Because states do give access. This is what I mean when I said earlier that some states actually give access to these credits as well. Okay. And, it makes sense to hire certain demographics so that you can get access to a credit for hiring them, especially in that first year. What would it be like to getting like $9,000 back off of what you paid to the employee that year? Right? Big deal. Some people are not getting paid six figures, right? To work with you, right? So, but some people are. But if they were getting paid six figures, that's 10,000. That's almost 10% of a of a discount on what you're paying your employee. And if it's if it's less, there's more of a discount. Get that, okay? The less you're paying them, if they're paying 80,000 or 70,000 a year, that's still, up to $9,000 of a credit in some areas. That's a significant amount off of their wages, right? What would you be able to do with that? Now, how do you shift it? Okay, and this is what I want to talk about now. How do you shift it? When I say shift it, I mean how do you shift you? You want to shift you to be able to take advantage of these credits throughout the year because, like, look, this time of year, some of you are going through situations where you're paying more taxes than you want to. You're paying more taxes than you want to, and you didn't have to do that. And the thing that's going to have that cycle be shifted, when I say shift you can shift you out the loop that you've been in from coming to the wire tax time and having to pay out of pocket or paying more than you wanted to, not having as large of a refund as you wanted to have. The thing that's going to shift you now is to understand, well, what actions you're going to take moving forward to change the game, right? What are you going to put into place systematically, structure-wise, to change the game altogether for yourself in this area? Okay. Now we talked about a few things, but the overall theme of this is being able to have a strategy, right? You want to have a strategy and a plan of execution for that. A strategy and a plan of execution for that. And if you feel as though you don't have time, you're overwhelmed, those are just reasons and excuses, my friend. Reasons and excuses for you not having the life that you want. And this will give you access to having the life that you want if you put your energy and attention here. And I want to encourage you to do that, encourage you to invest it here because it is an investment that will keep paying dividends off year after year after year. Guess what? When you have a plan in place this first year, it keeps paying. Once you put it in place, it's in place and it pays year after year after year, and you just keep building on it. And it's an investment that is worth it, is what I want to say. That's what I want to leave you with in this conversation. I'm hoping that you guys are encouraged. I'm hoping that you were inspired to go out and create this strategy for yourself. Get with your professional. And guys, we have this process for the people that we work with. We do this with you and for you. If you need somebody to help you, you can definitely reach out to us. You can reach us out to us at youraccountingsuperhero.com. And, the phone line is 888-428-2669. And I want to make sure that you're set up to win in the biggest way possible. And this is one of those ways, guys, to take advantage of tax strategy. It's been a great conversation to be in with you guys. This is it for this series. We're going to start a new series next time around. I'm thinking I want to talk about some things that we're going through with people in terms of asset protection and talk about that, some how you can play at a higher level with asset protection and tax strategy at the same time. All right, so we're going to get into that later on. Guys, it's been great being with you is what I want to say. All right, have a great rest of your Monday. Have a great rest of your week, and I'll talk to you next week. Take care. Bye-bye.